Thanks to all our veterans out there, and welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton. Hello there, Lawrence. Emily's off.
Good morning. Yeah, it's sad she's off. No one's there to keep me on a leash. So let's see what happens today.
I'll be there. All right, checking in on Bitcoin. The CoinDesk Bitcoin price XBX index currently trading at $64,912. Bitcoin slightly down over the past 24 hours, about almost 5%. And the CoinDesk Ether price ETX index is trading at 4707, also pulling back about 1.4%. And the new DFX CoinDesk's DeFi index is declining about 4.5%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Lawrence, a sea of red out there. What's going on with this bloodbath?
Look, there's some concern going on right now with China because you had Evergrande, which is one of the largest real estate developers there. At first, this morning in China, which was yesterday afternoon, it was reported that Evergrande was going to default on a loan payment. It's now reported that now, in fact, they're paying it. But nonetheless, there's some concern overall about the debt markets in China. What does that have to do with crypto? Well, it's always been rumored that some of that debt is at least held by some stable coins, which I won't mention because they're really good at putting out a lot of memes. And anyway,
you don't want a meme against you, Lawrence.
No, I don't want a meme against me, but now it'll happen. So the thing is that not having that kind of disclosure and not having that kind of transparency is kind of spooking the markets in crypto because they're not quite sure with what they're holding is going to be good. And the other thing, too, is that there is also, aside from that, this sort of risk-off mentality, which is like, okay, you know what? Right now, we're just going to hold our cash as best as we can. That usually is bad for crypto.
Mm-hmm. Yeah, and in an unrelated story, Elon Musk is selling off his $5 billion worth of Tesla stock, partially owing to cover a big tax bill after exercising stock options that were due to expire. It seems like he was trying to make a statement about it, but folks responded in a poll on Twitter that they want him to sell. But nevertheless, we got to move on. Let's have a look at our spotlight guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
New York CityCoin, the second in a series of city coins powered by the Stacks protocol, officially launched Wednesday afternoon. Incoming NYC Mayor Eric Adams welcomes the crypto community-led project with open arms, hoping to lead New York to become the top crypto hub in the United States. But he faces stiff competition from the Mayor of Miami, Francis Suarez, who joins us now from Florida. Welcome, Mayor Suarez. Great to have you on again. So you and the incoming Mayor of New York seem to have developed an amusing online rivalry.
Yeah, I mean, he's a friend, and we're sort of one-upping each other, understanding that there's a finite amount of capital in the world, there's a finite amount of talent in the world, and we even though we don't necessarily feel everything is mutually exclusive, obviously when things like was mentioned in the program, when China shuts down mining, Bitcoin mining, or Bitcoin generally, that's a huge strategic opportunity for the United States. And that's something that we as cities should all partake in. But I think there's also this friendly rivalry among cities to be sort of the first at, being, the Web 3.0 city. And certainly in Miami, as you know, prior to the mayor of New York becoming mayor, I was talking about, posting Satoshi's white paper on our website, allowing our employees to get paid in Bitcoin, allowing our residents to pay for fees and taxes in Bitcoin. And of course, I was the first elected official in America to pledge to take their salary in Bitcoin. So it's a fun rivalry, but it's definitely something that I think is going to help the Bitcoin community. It's going to help crypto in general and blockchain in general.
As far as, of course, first off, thank you to the veterans of Miami on this day. Thank you for coming on Veterans Day. It's one thing to get paid in Bitcoin and to allow people to pay some bills in Bitcoin here and there, but what is Miami doing to ensure that residents in the city get jobs in crypto? What are you doing to help grow the sector among the people who live there currently?
Well, we're the only city in America that's actually doing it. We have attracted major exchanges like blockchain.com and eToro to have a headquarters here in Miami. We got a major sponsorship from FTX, which paid $200 million for the naming rights for the arena, the county's arena. We also got XBTO to name in the Inter Miami jersey, be the jersey sponsor. So, and then of course we got the Bitcoin conference, which is the largest Bitcoin conference in the world, to move from LA to Miami. So we've done everything to create an ecosystem. As you know, I've been talking about Miami becoming a mining hub. So we've been talking to our nuclear power provider to make sure that we can provide cheap energy so that miners can mine in the city. So we're trying to create a comprehensive Bitcoin and crypto ecosystem so that we can, grab the mantle of the most crypto-friendly city in the U.S. And that's created, by the way, hundreds of high-paying jobs. So to answer your question directly, that's hundreds of high-paying jobs for our community.
Mayor Suarez, I just want to remind you that Consensus by CoinDesk is also one of the largest crypto conferences in the world. Nevertheless, how much has Miami Coin generated
we gotta get 'em to Miami.
Since how much has Miami Coin generated for Miami since its August launch? I know there must be an update in that. And does NYC Coin pose a challenge to Miami Coin in terms of how much earning potential that has?
Well, first of all, we got to get them to Miami. That's the first thing we got to do. And then the second thing is, so in a little more than 3 months, it's earned over $21 million, which obviously annualized, if you could annualize it, which, life doesn't really work that way, but if you could annualize it, it'd be it'd be $80 million. So that is roughly, 1/5 of the entire tax revenue of the city of Miami. So if you were to 5X it, you could theoretically at one point pay the entire tax revenue of the city, and the city could be a city that runs without taxes. Which I think would be revolutionary. We're going to take our first draw on the first 20 million, and we're going to stake the remaining balance in Bitcoin. So what we're going to get as a yield on the staking is Bitcoin, and we're going to do something again that's innovative. We're breaking this news on your channel. We're going to be the first city in America to give a Bitcoin yield as a dividend directly to its residents. So we're going to create digital wallets for our residents, and we're going to give them a Bitcoin directly from the yield of Miami Coin.
Hold up. So how are they getting their wallets? What are you going to do? Are you going to? It's not going to be you yourself like handing out the. Go on.
It's not going to be me myself handing out the digital wallet. No. So that's actually one of the most challenging parts, right? Because obviously this is a new technology. First, you have to define the universe, and that in and of itself is going to be a challenge. Is it going to be, for example, taxpayers? Is it going to be people that vote in the city? Is it going to be, people that have a city address? So that's going to be a challenge. And then secondly, you have to work with a variety of technological companies that we all know who they are, all the major exchanges, to give people the ability to acquire a digital wallet, have some sort of a registration and verification system, so we know that there isn't fraud or people just like sort of moving into Miami to get Bitcoin. And then once that is all taken care of, then we'll be able to do the disbursements. But we actually did this about a week ago. I had an organization called 5,000 Role Models of young men who came to our city who are going to help us and teach them in this crypto movement. And I pledged to give them a few $100s in Bitcoin. And so we're setting it up sort of as a pilot with them and going to go from there.
Well, can you tell us, who may be behind this wallet that is being developed that you want to use for the folks in Miami? Are there airdrops involved to get people, interacting with Bitcoin, just like we see in El Salvador?
Yeah, so we're obviously looking at all the different technologies and the different efficient ways to get it to people's wallets. So that's it's going to be a big part of the fun and the enjoyment in actually executing. And the second part is obviously an educational piece. We want to make sure that our residents, our employees, we talked about this when we were going to pay our employees in Bitcoin, are educated and understand why are we making such an emphasis in Bitcoin. When you see inflation at over 6%, which I think is an underreporting of inflation, and you see the price of Bitcoin surging, it's clear that people are taking their money out of dollars and putting it in a currency and in a store of value that they feel confident in, because it's not driven by people who can manipulate it for their own policy ends.
Do you see folks eventually paying the taxes with Bitcoin and using Bitcoin as cash in Miami?
I do. I see. We're working right now with Miami-Dade County. We have a very sort of forward-thinking county commissioner, Daniela Levine Cohen, Cohen Higgins, I'm sorry, who is actually putting a parallel piece of legislation at the county, because we need to have both county and city adoption to pay for the taxes. And then I do see very quickly a world where the Satoshi system is what is used to make payments. We need to make that leap, and we need for people to understand that yes, Bitcoin is increasing in value, and yes, we want you to hold Bitcoin, but at the same time, we also want to increase the utility of Bitcoin, which, by the way, increases the value even more, and also creates more functionality so that so people can be in a better currency, frankly.
Well,
so what about Suarez, Miami Coin? Are you going to let people pay in Miami Coin, or is it just going to be Bitcoin?
No, I'm sure they're going to have the option of paying in Miami Coin as well, and they'll probably get some sort of a discount, similar to what all kinds of sort of these point systems are, and with credit cards and all that, reward systems. So there'll be something in it for Miami Coin holders as well. But Miami Coin holders can be Bitcoin holders, can be Miami Coin holders, can be yielding in Bitcoin. So, and our Miami Coin is obviously based on the Stacks protocol that is that stacks on the Bitcoin blockchain. So there's all kinds of nexuses and involvements between one and the other.
Wow, Mayor Suarez, thanks for that bit of breaking news on our show. Respect for coming on. Mayor-elect Adams still is too timid to talk about crypto on our show, but I appreciate you coming on and having an intelligent discussion on it. Thank you, Mayor Suarez.
I think he'll be following soon. He's been following on some other stuff, so he'll follow soon.
I hope so. That's a challenge. Here. That's a challenge out to you, Mayor-elect. All right. We want to also dive into the technical nitty-gritty of just how these city coins work. And joining us now for a deep dive is CityCoin community lead Patrick Stanley, who joins us now. Hello there, Patrick. So how do these city coins work? You have Bitcoin, and I understand the Stacks protocol is a side chain that is parallel to the Bitcoin blockchain. And these city coins are basically a DeFi project on Stacks. So maybe you can walk us through.
Yeah. Let me just take a step back and say, what Suarez just announced is pretty insane. He just turned his city into an oil producing country that gives Bitcoin yield to its citizens. That is incredible. And that wouldn't be possible without Stacks. So Stacks is just smart contracts on Bitcoin. You mine Stacks by, instead of spending electricity like you spend with Bitcoin, you spend Bitcoin to mine Stacks. And so that Bitcoin is forwarded into the Stacks protocol. It generates a yield for holders of Stacks, now including Miami and its citizens. And with CityCoins, what we've done as a community is we've actually just generalized that exact mining process. The mining process is called proof of transfer. And I like to call it recycled proof of work. And so instead of taking Bitcoin to mine Miami Coin, you take Stacks to mine Miami Coin. You forward it into the mining protocol.
Is that just because I know you call it mining? It's a little bit confusing because it's not folks with ASICs that are trying to mine for a Stacks. Right. You're taking your Bitcoin and I guess you're trading it for Stacks, and you're putting it into a smart contract, and you may or may not get city coins out of it, Miami Coin or New York City Coin, and so right. it's almost like a charitable thing, giving your Stacks away to this smart contract, which benefits the city.
It's a one-way.
Yeah.
Yeah, it's a one-way transfer. It's one-way transfer, and just like when you spend electricity with your Bitcoin mining rig, and if you don't win a block, there's a chance of not winning a block. In this
but
case,
you're seeing that a lot of folks want to do this one-way transfer. I mean, they want to, give away their Bitcoin in the hopes of benefiting the city. Is that the idea here?
That's correct. I think it's more of a win-win-win thing. So, folks are in order to get city coins, they're transferring Stacks, and so they're hoping to get Miami Coin, and now, and in about 2 hours. 2 to 3 hours from now, they're hoping to also be able to get New York City Coin. They'll mine, that's a whole separate token that they can mine separately. Yes, they benefit the city as well. So there's altruism and self-interest in the same move, essentially, in the same action.
So exactly then, if you could repeat, how exactly are they going to earn yield? I mean, we hear these high yield numbers coming out.
430% annual percentage yield. I mean, wow.
Yeah, I honestly don't like to quote it in yield, because essentially what's happening is 30% of what's being forwarded in stacks as miners goes directly to the city, and that's why the city's wallet is at $21 million or so. But the remaining 70% goes directly to all the existing holders of Miami Coin, which there are tens of thousands of at the moment. A few months in. So as the holders grow, as the supply grows, the yield will sort of asymptotically sort of go down nominally. Now, if the value of the cryptocurrency goes up over time and the demand outstrips, then the nominal yield will stay the same, but the yield will actually could go higher if the price is going up.
Mm-hmm.
So how can you actually trade these coins? I mean, can you trade it in the U.S.? Can you trade New York City coin in New York City, which has ridiculously hard
onerous
regulations through
bit license?
Yeah, bit license. Well, like Eric Adams is meeting with folks in Albany right now, like trying to. And note, I'm not saying he's trying to get bit license removed today, but no doubt he's trying to get bit license lessened or removed. That's his first order of business. That is the number one thing. So, I gotta say, Mayor Suarez was like, it's pretty hard to argue there's a better mayor for crypto than Mayor Suarez, and Eric Adams does want to compete with him, and he's going to have to get rid of that bit license that doesn't make a whole lot of sense to have in the first place. He's got to get rid of that thing. So he's gonna work on that. And if he can't get rid of that, then that's a loss for New York.
So this is a crypto community-led project that is basically benefiting cities. CityCoins first chose Miami. Why did they choose New York City, given these past unfriendliness toward crypto? And with the introduction of NYC Coin, will that potentially take away from the benefits that Miami is earning?
No. So two things. First of all, a rising tide lifts all boats. CityCoins ecosystem can't exist without more than one city. And what we need to do as a community is start to build out these protocols further and further, and have them mature and attract more people to them. But I will say. If there's any detraction from another city, I think that's a temporary thing, and I also think it's a very positive sum sort of thing. Like people mining the NYC coin will mine Miami coin. And your other question was, sorry, I'm trying to remember. It's like 6 a.m. here. What was your other question?
No problem. If the introduction of New York City Coin will take away from the benefits that Miami Coin has, having accumulated $21 million in worth of benefits that will go toward the city. And why did you choose New York?
Yeah. So the community voted on New York. It was pretty easy. It's pretty easy decision. So Eric Adams goes on Bloomberg and says, "I got my friend Francis Suarez. Is first mover. He's a leader, and he's got this Miami Coin thing that's going pretty well. I'd like to go in that direction. I want to have a friendly competition with him." Those are the words he said. Our community said, "Say no more. Say no more."
Well,
and it got activated.
The competition is on.
Where can we buy it? Yeah.
Pardon?
Where can you actually buy it though? Where can you actually trade it? That was my initial question.
So any exchange is free to list New York City Coin. It's an open source project, and there's no dev fund, there's no ICO, there's no pre-mine. So the only way to get it for probably the next few weeks or next couple of weeks is going to be through mining it. So if you mine New York City coin, that's the primary way to get it. And
but
many
that is
people
so
have mined
confusing that you call it mining, because you're not actually mining in the traditional sense of how you do Bitcoin mining, but you're, I guess, buying stacks and sending it to this smart contract, right?
Mm-hmm.
Okay. Mm-hmm. All right, folks. So that's how you do it. You got to buy some stacks. You got to send it to the smart contract, and you might get some New York City coin in the process. All right. The competition's on between New York and Miami. We'll see what happens. I'm excited. Thank you, Patrick, for joining us. CityCoins community lead, Patrick Stanley, there for us. Coming up, checking in on Asia and the crypto markets update with crypto trading firm GSR Markets. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, November 11th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, Bitcoin hit a new all-time high of just over $69,000 US. That, according to CoinGecko, late Wednesday Asia time, spiking after October's US CPI leapt 6.2%, marking its largest gain in 30 years. We're going to take a look at why inflation is such a driver for crypto markets, and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, the chairman and CEO of Chinese tech giant Tencent, Pony Ma, has called the metaverse, quote, a very exciting but a little bit vague concept. However, he also says he sees it as an opportunity for growth. Just last month, local media reported that Tencent was hiring dozens of employees for projects that appeared to be related to the metaverse. Over in Kazakhstan, the Minister of Energy says lawful crypto miners will not face electricity restrictions so long as they do not compromise energy security in the country. Now, power had been rationed after an influx of miners to the country saw electricity shortages. You can find more on those stories at forecast.news. All right, taking a look at the new economy now, where every week we take a deeper dive into the current crypto landscape, the opportunities, the challenges, and we explore the hottest questions in crypto right now. In the hot seat, Michael Wu, CEO and founder of Amber Group. It's great to have you, Michael.
Thank you, Angie. It's great to be here.
All right, so Michael, in the past 24 hours, we saw crypto prices surge within minutes of reports showing inflation in the US is rising while wages are falling, and the price of Bitcoin hit yet another all-time high. Why?
This is a very, at least eye-popping number on the CPI. October CPI in the US is up 6.2%, which is, I think, the historical high ever since 1990s. Now, what does that mean? That means inflation is here, and it is, affecting people's daily life. Why does it matter to Bitcoin? Now, first of all, many people still know Bitcoin as the digital gold. They still know it as a digital form of storage of value. They see it as a inflation hedge, just like the physical gold. So not surprisingly, with such a upside shock to the CPI, both the old gold and the new gold rallied a lot.
Another hot headline this week, we heard Apple CEO Tim Cook reveal he owns crypto. Why do you think the market cares so much when we hear mainstream business leaders owning Bitcoin?
I personally don't care that much, and I doubt a lot of the more serious investors in the space really cared about it, except the sort of the sensational news headline. I think that Tim won't be the first, won't be the last.
This is, after all, the new economy. Thanks, Michael Wu, CEO and founder of Amber Group. Over in South Korea, for the first time, the court has ruled in favor of customers who lost money in a cryptocurrency exchange hacking incident. 11 investors who suffered losses after hackers hit CoinRail, stealing $40 million in altcoins back in 2018, sued the exchange. Forecast News' Danny Park has more.
Although the police retrieved some of the stolen crypto this year, many investors lost out. So the former customers claimed damages from CoinRail's operator Linus, saying the exchange was at fault for the hack and that it refused to return their deposits afterwards. Then on Wednesday, Seoul Central District Court decided that CoinRail should pay the plaintiffs 380 million Korean won, or around $320,000 in damages. However, while the judicial panel ruled that the exchange was obligated to reimburse the virtual assets deposited in each user's account as stipulated in the exchange's terms and conditions, it said the exchange was not liable for the hacking itself. With the court ruling heavily based on the exchange's user agreements, it's a warning to always exercise due diligence. For Forecast News, I'm Danny Park.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's check in on Bitcoin. The CoinDesk Bitcoin price XBX index is trading at $64,704. Bitcoin is down about just over 5% over the past 24 hours. And the CoinDesk Ether price ETX index is at 46.98, down 1.6%. And the new DFX CoinDesk DeFi index is down about 4.7% at 634 points. Joining us now to discuss the crypto markets is Rich Rosenblum, co-founder and president of GSR Markets. Hello there, Rich. So we are seeing a sell-off in the crypto markets. What's behind this decline?
Good morning. I'd say the past 24 hours is all about that CPI print. Crypto hadn't really been driven as much by that macro data, but I think since we've had the ETF come out, it gives a tool for macro traders, not just crypto traders, to trade intraday. And so I think we're going to see a higher correlation to macro markets. So yes, the inflation print should be good for Bitcoin, but then when other risk assets started to sell off, I think there's less money to be putting into Bitcoin, so started to follow it downwards. And traditionally, the non-farm payrolls are the most important number to follow coming out monthly. But I think given Bitcoin is more of an inflation-related asset, I think that CPI is really the number to watch when it comes to the U.S. Macro data.
And yet, Rich, we did see this sell-off overnight, U.S. time, early morning Asia time. In part, it seems to be related to what's going on in China's commercial paper and real estate debt markets. So, how much of a factor really can Federal Reserve data really be in this case? Because if it looks like inflation is the driving factor for a rally, why would commercial paper matter? Why would other things matter? Wouldn't the market just shrug it off and just say, hey, look, inflation continues to be a problem. Who cares what happens elsewhere?
It continues to be, a highly volatile and choppy market. If there's, one fund that has this thesis and they want to, take profits or add a short, that's going to mean the market can be going south and for a number of hours or days. So, it's still going to be a disconnected market where doesn't have to be a consensus view is driving it. It might just be, one or two flows. My personal view isn't that it's, such an important issue. I think that there's a confluence of other factors that are going to be driving the price over the coming month or two.
Yeah, well, we certainly... Go ahead, Lawrence.
One thing, as you were mentioning, the coming month or two, of course, it's the end of the year. Fund managers like to get their bonus, tied to their performance over the year. And they also want to have some window dressing potentially so that coming into the new year, if the inflation story is what's going on, they want to show that they are hedged and will own Bitcoin. Do you think that they will take profits before year end, or will that narrative that they need to have this window dressing Do you think that will be the argument that will succeed, and you'll see fund managers hold on to Bitcoin into the coming year rather than sell it before year's end?
We think we're going to close the year at an all-time high. I think there's going to be modest gains from here to there, another $10,000, so somewhere in the 70s. I think there's many other factors besides what the funds are doing. And I think this last month was less about macro, less about the inflation. I think it more has to do with bringing in this ETF that lets a whole new set of users buy. And also it's the token market. I think that used to be that you'd have investors come in and buy Bitcoin, then the insiders would take profits on Bitcoin and they'd buy tokens. Now I think it's, you don't hear anyone mentioning the word maximalist. It's almost never mentioned. It's a multi-chain world that we're moving towards. And I think that there's been so much progress in the token market and so much upside, starting to see the reverse, that people are taking profits on their tokens, rolling it into Bitcoin, because Bitcoin has been de-risked. It's not a stable coin, but I think rarely do I hear anyone thinking it could go below 50,000 ever again. I think that there's a lot of people thinking that it's going to be a stable route upwards. So if you've made a good amount of gains in other aspects of crypto, you might, instead of roll back into stable coin or cash, leave your money in Bitcoin. So I think that this past month you've seen a lot of air go into Bitcoin, because of the extreme strength that's been into tokens.
Right. And just, commenting on your investment thesis on inflation, we did indeed see all-time highs, Bitcoin reaching just under $69,000 after that CPI report that came out that showed, 6.2% inflation in October. But now we're seeing a pullback. So my sense is that you believe that this is just temporary, short-lived. And if so, where do you see Bitcoin at the end of the year? And also, if it's a more stable, de-risked asset, if you will, what opportunities are you seizing aside from Bitcoin?
So I think we're going to be in more of a 65, 80 type range between now and the end of the year. Another reason for the pullback, I think, has been the story around Tesla. There's not that many reasons why those two should trade tightly, but they're both part of the quote unquote millennial basket. So when one falls, the other might fall due to that historical correlation. In terms of other plays, the moves have happened already, but I think you're going to just continue to see money flowing into Solana, Luna, Avalanche, Algorand. I think that people have realized that we need more smart contract networks. There's different use cases for each of these layer ones. And I think we're going to see more follow through as ecosystems build. People realize there's high quality communities with a lot of adoption.
All right, great. Rich, thank you for your insights as always. Appreciate you coming onto the show. That was GSR co-founder and president Rich Rosenblum. Time now to check in with Crypto Twitter with our tweet of the day. And folks are having a bit of a rough morning. Chipzoo tweeting, I just bought BTC on the backs of this CPI report to hedge against 6.2% year over year inflation. My entry was $68,900 and I've lost 6.4% of my purchasing power in the last hour. So Bitcoin is volatile and not for the faint of heart.
I'm just glad you didn't pick Elon Musk's recent tweets.
Or Doge.
Take a look at it, but not around
Shiba Inu.
Not around your kids should you read Elon's latest tweets. That's all I'm going to say.
All right, that's it for First Mover. Thank you, Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon are the friendly folks from The Hash. You're watching CoinDesk TV.